Hello again, everybody. Dwayne here from DRFX Forex Swing Trading. Aussie US dollar. Here we see that the market has been in a very strong uptrend since 2001, and that most recently the market created a sharp downtrend as it headed back towards its outer uptrend line. So, based on what we're seeing here, we could either see two things, one of two things. The market could continue with this bearish momentum in favor of the US dollar and break this trend line to continue in this direction and form a major downtrend, or we could actually see the market rally from this area here and break these downtrend lines to resume this overall bullish direction in favor of the Aussie dollar. So based on, so it was important to then identify what were the signals that were needed to indicate that we were either going to be headed bearish or return above this trend line. Now, a few days later, or a few weeks ago, we had noted that the bears had taken control and that we had seen this strong bearish signal below the trend line. So on the face of it, it may have appeared that we were starting or continuing with this downtrend and that we were going to break further below this trend line. However, one of the problems with this is that this setup here that led to this candle was not strong enough. You simply had a series of weak candles followed by a strong candle. And while this candle by itself, under other circumstances, can or by itself is a strong signal, if the setup that led to it is not strong enough for the type of barrier that is being broken, then it is likely that the candlestick will fail. So even though we did see the market break lower for a little while, it was inevitable that the market would eventually pull back as a result of the fact that this setup was fairly weak, was too weak to justify entry. So what we're seeing now is basically the market starting to form a much stronger setup that could either lead to the break of this counter trend line to resume the breakout, or we could actually be in the early stages of a reversal that actually takes us back above the trend line and above this outer downtrend line to resume the major uptrend. So those are the two possibilities that we could see take place at this area here. At the close of today's trading, the market closed with this second tweezer top. So this could be an early indication that we're going to be getting a bearish signal over the next couple of days that eventually leads to break of this counter trend line. So that is a possibility in terms of the bear scenario. Now this bear scenario is pretty common when it comes to breakouts from or breaks of major barriers such as trend lines or even consolidation breakouts, consolidation barriers. One of the ways in which these barriers are broken, and I'll use the example of a consolidation here, since the principle pretty much applies to breaks of trend lines as well. The market can either break the barrier with a single candle or with a pullback just ahead of the break of the boundary, followed by the break with a candlestick formation with a candle, or it could break the barrier and then pull back to test it, and then follow it up by a U-turn with a strong signal to resume the direction. Now this first option is more associated with consolidation. You'll hardly ever find these leading to successful breakouts when it comes to trend lines, especially major trend lines such as the one on the Aussie US dollar. You're more likely to see setups such as these, and you're likely to also see them being a lot stronger than the examples that I have here. These examples can typically take place with consolidations, but the principle is the same with trend lines. You have an initial test of the barrier followed by a pullback and a U-turn that produces a signal, or we could either have the market break the barrier, pull back, and then produce a signal. So this is what we're seeing taking place in terms of the third option. where the market has broken the barrier and is now pulling back to test it before U-turning to break the barrier and then continue bearish. So that is a possibility in terms of the bearish scenario that we could see over the next couple of days. Bullish, the market could actually form an ABC setup, which is another popular candlestick formation that you see across the currency market. Here we can see that the ABC signal is one of the most popular currency candlestick formations across the currency market that generally lead to strong breakouts. So this pullback that is taking place could actually be the formation, represent the formation of the AB area of this potential ABC setup. If we then see a pullback that is deep enough, that is then followed by a bullish U-turn, that would complete the formation of the ABC setup and lead to a rally that takes us towards this trend line here. So that is another possibility that we could see, and that would be the first or one of the possibilities in terms of the bullish scenario. So the market would have to pull back fairly deeply, almost coming a little towards halfway of this ABC signal, ABC area, and then produce a strong U-turn that closes above this trend line and starts a rally to take us above this outer downtrend line. Another possibility is that we could actually have the market form a small consolidation at this area here. So we could actually have a setup that could also be considered to be an ABC setup, but in the form of a consolidation. So this would be the C area, and the break would take place possibly simultaneously with the break of this resistance area and the outer downtrend line. So that is another possibility that we could see if the bearish scenario does not unfold. So that is what I'm seeing as the possibilities for this pair over the next couple of days. An ABC setup, either in the form of a consolidation such as this, or a pullback and U-turn followed by a candlestick formation, or a break of this counter trend line following the test of this broken trend line, and the break to start the downtrend in favor of the US dollar.